Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're having a good week. Ended the week on a sweet bullish note for the sector as a whole. As we know, we are heading into the vote week on June 7th. We got a big vote approaching. I assume it's going to be after hours on June 7th, so that means we do have about 4 trading days left to go before that sits in. And in terms of whether we get a sell the news reaction or not, that's what everybody wants to know. People are anticipating it, looking out for it. In my opinion, the harder we run into June 7th, the more likely a sell the news reaction. So if we see a 10% move Monday through Wednesday, I'm going to be looking to lock in profit personally so I can be protective of these shorter term positions. If you are long-term holding, then you're not doing anything and it doesn't really matter the day-to-day action. And unless you're trying to learn technical analysis, there's no real reason to be watching the daily chart if you are a long-term holder. And that's where the most discrepancy is in these videos. When I talk about trading and short-term, the biggest pushback is from long-term holders, when in reality, none of this applies to you. You're watching the weekly chart if you're watching anything, and other than that, you're playing fundamentals. So we traders will do our thing, investors do their thing, everybody's happy. So where we're looking, we're going to look at WEED, CRON, APH, ACB, then we'll look at new kid on the block, TGOD, then some names that I've been trading and holding longer than I normally hold positions, ITHUF and IIIPR. So the psychology of what's going on leading up into this week is traders and investors are anticipating a bullish result of the vote. That being said, it's a high percentage that is going to happen. So the market is going to price it in accordingly. The only way, in my opinion, that the market does not price in a bullish vote passing is if we see institutions instantly say, okay, now we can buy. And I don't foresee that happening, but it is a possibility, so definitely want to touch on it. So I will personally be protective heading into it, but it's also psychologically, it makes me hold my positions longer. If you've been watching these videos, you know I'm a short-term trader. I don't like holding swing positions overnight. I lock in profit when I have it. And this is a scenario where I've been holding positions longer than I normally would, specifically ITHUF and CRON and IIPR, because we're heading into the vote. And IIPR is not Canadian related, but the setup is there, and we'll check that out at the end. So for weed, we know we had the weekly equilibrium. That was what we were watching for months, and it finally broke bullish. So that is a clear longer-term bull signal. Higher low, lower high. The bull break was 31.46, and we ran to 40 after that. So about a 30% run. In response to that, we consolidated, established a higher low of support at 33.76 now. So that's now a support level to be watching. And the bulls are looking to head back up to $40 as we head into this week. That's currently my target. I want to see a $40 test from these bulls, and we're going to need about 6%, 7% to do so. And that's entirely possible. Like I said, we got the hype. We got a bull MACD cross on the weekly. The daily chart looking pretty strong. In my opinion, I would personally be expecting an equilibrium pattern to form if we didn't have the news potential catalyst. And when I say news potential catalyst, again, I'm referring to the days leading up into June 7th. So we've got our high, low, and I would expect a lower high compared to $40 just by the way this looks. We don't have any spike in bull volume, and the wide range from the high to the low of consolidation usually sees an equilibrium pattern along with the new price discovery. When you see a breakout or a breakdown into a new range, the equilibrium pattern is the most common pattern as we see price discovery and the market sort of settle down. But we closed pretty strong here at the end of the day. There was definitely selling pressure in terms of keeping a cap on WEED. And what I mean by that is I was just watching the bid and the ask and level 2 for the last hour and a half of trading, just staring at it. I was in a position and I was watching everything because I was managing more positions than I'm normally used to. I have about 4 MJ positions heading into next week, but WEED is one of them. And you could consistently see there were hidden asks, and it was between 37.70 and 37.72. And let's look at the shorter term time frames. But we were butting our heads up against this resistance level. This is the 2-minute chart just to show how many times we hit it. But here's 37.72, so 1, 2, 3, 4 rejections, and then some rejections from 71 and 70. And what would happen is every single time the ask would get bought, we would either see it get replenished with another, 2,000 or 3,000 shares, or we would see 1,000 shares on the ask, and then 3,000 shares would hit the ask to buy that wall, and it wouldn't move. And that means there's hidden shares behind there that someone was either looking to unload, someone was looking to keep a cap on the price. You could say, someone was looking to cause a bear drop at the end of the day so they could have loaded all this bull volume. That's entirely possible as well. If you're a longer term, if you're a bigger position, a whale, and you're looking to load up, rather than buy a bull break and run the price into the end of the day, you can keep the price contained, it drops down, and then you absolutely load into the last 10 minutes of the day. You can see it's all bull volume. And compared to the bear volume that kept it capped and then saw the drop, it doesn't even compare. So that's, again, it's all speculation as to why it was happening, but there's no doubt in my mind that it was intentionally being held down. As far as, why, it's anybody's guess. But we did close just fine for the bulls. The hourly consolidation, very healthy. This is a bull flag on the hourly. Another reason that I was looking to swing my position. And we need to see a break of 37.98 first thing on Monday to get confidence in continuation. And our RSI levels are not too overbought really anywhere. So we could still see some further upside, which is why I swung my position. CRON was beautiful after pretty disappointing the day before. So I've been swinging CRON at this point for weeks, and that is, again, not normal for me. But it's this equilibrium pattern, and I entered within this equilibrium pattern because I was anticipating a bull break because the market is bullish. The sector is bullish, the S&P 500 is bullish, and WEED had this same weekly pattern that broke bullish. So that's the kind of scenario risk to reward that I am happily ready to take as a trade with a stop loss if we lose the higher low pattern and looking for continuation and a break. So we got the bull break today of 874. The weekly lower high pattern has broken. Next clear resistance is 994. Tons of upside potential, over 10% from where we currently stand. And if we were in a similar position to where we are with WEED, we'd be up around $12. So not saying that's going to happen, but definitely going to be looking for further upside. And we'll be watching for a potential weekly MACD cross as well. The daily chart was in an equilibrium as well that broke before the weekly equilibrium broke. So there was a couple equilibriums going on. And just watching within this range, I did trade within this range a little bit. I sold a quarter of my position up here on the initial bull move into the 870s, and then I did reload it in about the 780s. And we saw the tightening pattern, higher lows, lower highs. Clear bull break was yesterday, but it was a bit of a fake out, and we pulled back. And that was the frustrating part. When we went from 866, and I'm trading the US ticker, but we went from 866 all the way down to 794. That's the kind of scenario where it's really hard for me to swing trade because I've been holding for weeks, but I'm sitting here and I'm watching every tick, and I'm saying, oh man, I was up, X percent on the day, or X dollars, 4 figures, and now I'm down 4 figures at the same amount because I didn't lock any profit because it's a swing position. And that's something that I'm working on. Everybody has things that they need to work on. Every trader, no matter who you are, has things that they can improve on. And my improvement I'm working on is swing trading. And it's just hard because I'm literally here every day watching tick for tick. So got redemption today with the bulls breaking out. The end of the day run was just absolutely, look at that. That is insanity. And we're going to look at TGOD, which is replicating this, but that's because it's all-time high blue sky breakout. This is just wild price movement. And it's something to note. Right now, CGC and WEED, the volume is still the same in terms of weed has about 60% more dollar volume. That's just a very rough number, but it's not really comparable. Whereas the US ticker CRON compared to the Canadian ticker has a lot more volume. So let's just say dollar volume here on the Canadian ticker, we had 570,000 shares traded at roughly, let's call it 850. And just comparing it to the US ticker, today we had 3.4 million traded at $6. So that's, 20 million in comparison to 4 million or something like that. And again, those are very rough numbers, but the idea is the US side is trading way more CRON than the Canadian side is. And it's very interesting to me that if that switch happens with WEED as well, we are going to see more and more, the more that the dollar volume is leading the way on the US side, then we need to chart those names. So I'm personally charting CRON on the US sector, whereas I'm charting WEED and trading CGC based on the WEED chart. I'm charting the US ticker CRON because the volume is on this side of the border. And we're going to be watching, obviously we have the posturing and back and forth, Trump tariffs and all that. I don't think it's going to have a significant effect. I do think it would have an effect if the market dumped, but the S&P 500 looks just fine. And I do believe that the more the US volume is running the show, the more correlation there is to the S&P 500 and the major markets in the US. So that's something to be aware of. So CRON, really strong end of the day. I would have normally been looking to take profit, but again, I held my position because I got the bull break I was looking for on the weekly and the daily time frame, and we're heading into the vote. That's another reason. That being said, we are extremely overbought, and if we do see some strength first thing on Monday, I will look to take a little bit of profit and then reload cheaper ideally, as the RSI levels are really high on all kinds of time frames. But look at this weekly chart and compare it to WEED. The break just occurred. What happened to WEED when the break just occurred? We saw some solid follow through the following week. Even though we did see some profit taking in there as well, there was continuation. So I'm loving the setup on CRON. It's going according to plan, and that was a nice week maker to wrap up the end of the week, second half of the day today. APH, try and speed things up here. This is another doozy. APH on the weekly time frame, higher low and higher high. So we are changing the trend, and now we're looking for another higher low. So we're consolidating. Anything above 963 is a higher low, keeping the new uptrend in control for the bulls. Nice little lower wick here, holding the back test of these exponential moving averages. These are the 4 in the 8 period exponential, which I use for stocks. And they're about to make a bull cross. We call this a TCG cross. And it's about to be a bull cross if we can see some upside this coming week. And the bull MACD cross is closing in as well. So the daily time frame, a bit of a bullish reversal hammer yesterday. You could argue that the real body was too big compared to the lower wick, but that's a waste of time, that argument. So we saw the follow through today for the bulls, and really what it was the hourly time frame breaking the lower high pattern. So we saw the initial move today, and we said, okay, it's just another lower high, because the last hourly lower high was 1179, so nothing's changing yet. Then we saw an inside bar bull break, and then we broke the lower highs. Healthy bull flag of consolidation on the hourly at the end of the day, similar to WEED, and our new support is 1170, resistance is 1190 and 1195 before 12 psychological. So the bulls are getting their act together on APH. They're trying to see this daily chart change the trend again. We need to see a bounce and a move into the low $12 range, and then ideally a little higher low and higher high. But really, it's all bets off this coming week. We know there's going to be some high volume, some high volatility. And again, the preceding action, the days into the vote, are going to be the most important signal for me if it's a sell the news event or not. ACB on the weekly time frame, low, high of the bounce, higher low. We did bear break, but the bulls are just in a tightening range and there's not a lot going on, and ACB was feeling the pain today, watching everybody else have a party, and ACB wasn't doing anything. And look at the last few months, 4, 8, so 3 months, and let's see, that's 12 months or 12 weeks. 10 of those weeks are red. So very clearly feeling the pain. It's dilution. It's not the shares hitting the market. It's the market pricing in the fact that more shares are being created. So if you owned, 1,000 shares of ACB a few months ago, now all these deals are coming out. You own a smaller percentage of the company than you did previously, which is why the price goes down to reflect that. So what we're looking at on ACB, trying to change this trend, we have a tightening range. The most important 2 levels heading into next week, 793 support really needs to hold for the bulls, and resistance is 832. And if we can break that, we see a little daily higher low and a break of the lower highs and a recovery attempt. But personally, I want my money in the names that are responding well to the bulls and running, and not the names that have some downward pressure like ACB does. Clearly the weakest link this week, and right now all these other names are looking so much more strong and have so much more opportunity. And that's personally another reason why I find it so hard to be a long-term trader, because I want my money to always be working for me. I do not want my money sitting stagnant or consolidating for multiple weeks in a row, because there are other plays out there that could be profiting. So we are watching that tight range. The bears have control with a close near the low of the day. And we'll see if the bulls get any kind of pickup into next week. But we're already seeing plenty of other names with that pickup on the action today. So TGOD on the weekly time frame, wowzer. Congrats to any bulls that bought this one. And it was a really easy play. I personally haven't been trading this one because the volume on the US side is a little bit scary, just in terms of a lack of liquidity and the speed at which this price moves. I mean, we just pulled back 10% in 5 minutes yesterday. The bulls obviously bought that dip, but the fact that it can drop that fast and it can run this fast, that kind of volatility, I don't want to be trading in an illiquid market, which is what the US ticker is right now. But for TGOD and Canadians, plenty of liquidity, and it's been great for these bulls with huge follow through. I would absolutely expect today to be a volume climax, but we closed strong enough that we can absolutely see continuation next week. So we have the MJ ETF is buying TGOD, and shout out to our members who continue to share information and have hundreds of eyes on the markets and point that out to us. And as of Thursday night, there were 344, 360, somewhere mid 300,000 shares purchased. So not a huge amount. It was only 0.4% of the portfolio of MJ. but that tells us they're starting to establish a position. And if you got blue sky breakout and someone loading up millions of dollars, that's going to have a significant impact on the price because there's very little selling pressure up here. So the volatility, we can move huge to the upside, but don't forget that it works in both directions. And in my opinion, we're going to pull back 20% once we hit the temporary top, wherever that ends up being. So bull's still in full control, and we're just extremely overbought. As we know, the RSI levels can get more extended in blue sky breakout scenarios, but we have to be cautious, and I would be walking up a stop loss level. 4-hour time frame, inside bar bull break. We have another inside bar forming. Huge volume. Hourly chart, higher low, 618 is the support level. And after 618, we're looking down at 537. So that's why we can move so quickly in both directions, because we're running up so hard, we're not establishing support on the way up. So we're looking at, you could find 15-minute support levels, but look at this gap where there's a lack of support anywhere in the upper to mid $5 range. So bull's still holding on just fine. If you are in a position, no reason to sell. And if you've had, if you've been holding these past 4 days, congrats to you, either walking up a stop loss level, or if you're a long-term holder, then again, you're not going to try and flip and capitalize on this 10-20% drop. I think it's going to be 20%, but we'll have to see. And we're going to be watching resistance heading into Monday, 648, 660, and then 7 psychological. And again, the most important short-term support is 618 and then $6 psychological. And we are extremely extended, but we're not seeing signs that the top is in just yet. We just have to be cautious of it because, again, this pullback day, I mean, just this alone is enough to scare you. 10% in 5 minutes with an all-out dump, and then bulls bought the dip and saw continuation. And there's been, if you don't want to chase this pattern and you're a short-term trader, you don't have to. There's patterns within patterns to be playing. With our nice little equilibrium here, saw a bull break at 627, and that set the tone for the bulls to run up to 660 after that. So that's a 4 or 5% move intraday that could be capitalized just playing our regular old equilibrium pattern that we are certainly used to in many other ways, many other places. ITHUF, this is another one I've been swinging. I put this one in my IRA account. First IRA play that I've swung trade, and I've been holding it for weeks at this point. And that's because the daily uptrend is really strong. And I'll go through my psychology because I almost sold just before this new leg up. And my thought process on holding the position, so we hit the high, and on this weekly chart, I'm anticipating a lower high to form compared to the all-time high. Again, just because the most common scenario is an equilibrium pattern. When you have to cover this much range, the bulls usually tire by the time we get to the all-time high. And some people take profit because, again, at this point, we're up about 60-70% from the low of consolidation. But there's no sign of that profit taking at this point, and we closed very strong heading into the vote week, so I'm certainly still holding. But psychologically, we pulled back for a few days, and I said, all right, do I want to lock my profit in now? It's a really nice profit, a solid trade. I think I started initiating my position on this daily chart back here in the 370s, I believe. I'm not exactly sure, but a few weeks ago. And I was thinking here, am I going to want to pull back? And then I said to myself, no, the daily time frame is still a higher low pattern. And to change this trend, unless we see an all-out dump, we're going to have to see a lower high and a lower low. So I'll exit on that lower low and the loss of the higher low pattern. The volume continued dropping off on consolidation. That was another reason I was comfortable holding. And then the bulls got the follow through today. And I actually added today. I talk about in courses how, I don't really like averaging down in long-term positions. But averaging up is great because the trade's working for you. You're already profitable. So I doubled down today and ended up, by the end of the day, I got in at 407. So that's a very quick, almost another quick 2.5% added on to that winning position just today. So holding on for now, as long as the daily higher low pattern is maintained, looking for some of this momentum to continue into next week. And resistance after 420 is limited. We're looking at 420, 430, and 437 as the next couple of levels. And hourly support, we didn't really establish much, but look at that volume at the end of the day. Last support is down at 390. So we saw that volume at the end of the day on weed. We saw it here on ITHUF, and we're going to be looking, let's see what it's like on APH. Not really there on APH. We did see profit taking, but we're going to be looking for this volume to mean that we're going to start the week off strong. And I'm going to say it's a red flag for my game plan and my anticipation if we see weakness to start this next week, which I don't anticipate we will. IIIPR have been highlighting it as the US play, but I've been highlighting it because it was a textbook cup and handle pattern and it played out perfectly. So we had our resistance, highlighting it when we were consolidating in the healthy handle of a bull flag on the weekly. We got the breakout, and it's not a huge move. We're not getting 10% in one day, but we're getting solid follow through and continuation. And another incentive here, we don't have the Canadian vote incentive because it's in the US, but what we do have is dividend incentive, and they pay a pretty nice quarter on every share dividend, and we are looking at that to be at the end of June. So within 3 weeks or so will be the recorded date, and that's incentive again for people to hold their positions a little bit longer. So if I do take profit, which I may before then, I will be looking to reload to be able to get that dividend. So what we're looking at here is the daily time frame, still showing strength. So another little healthy inside bar bull break. And again, some profit taking. There's not a ton of volume on this name, so it's not a day trader. It is only a swing trader in my opinion, and you just have to be patient with it. Another inside bar today. We'll see how this inside bar breaks. We did have news come out yesterday, purchase of another property in Massachusetts, so they're expanding. And WEED had news today. It didn't really move the needle, so check that out on Google on your own, but certainly not relevant to the price action today as it came out middle of the day. But we're watching IIPR to continue the uptrend. If we break the daily inside bar bearish, 35.78 is the support the bulls want to hold to maintain the daily higher lows. We're just riding to the upside. We've gone at this point about 20% in 10 days, and we're looking really good. I will probably take a little bit of profit if we break the inside bar bearish to start this coming week, but it all depends on what the volume looks like, because again, I do like the price action we've been seeing. The 4-hour time frame is looking just fine for the bulls, and it's a good looking chart overall. IIPR has certainly been good to us this year, as we are now up from the low of consolidation over 50%. So that's where we stand as we head into next week. Again, establish a game plan. Doesn't matter what it is. I'm not going to say you're wrong for holding long and not trying to flip anything, but just stick to your game plan. So I know my game plan, anticipating some bullish action leading up into Thursday. If you are long-term, you need to establish a game plan. On TGOD, establish your game plan. Are you holding long-term? Are you going to try and lock in profit and avoid the 10 to 20% pullback that is very, very likely coming in the near-term future? Again, maybe the hype of the vote can keep this baby going for another few days, but the more we run up hard, the greater the percentage pullback will be from the temporary top. So again, establish that game plan as well. Are you walking up a stop loss? Are you holding long and not caring about the short-term action? Again, there's no right or wrong answer. Just have the game plan and stick to it. I appreciate you all watching, and we'll see you sometime in the future.